To what's been happening on the local market now, and earlier I spoke to Ken Howard at RBS Morgans. Ken Howard, another day of very little movement overall, despite a slide on Wall Street. Do we take any encouragement from that?
Look, probably not. The big questions as far as Europe are concerned still remain unresolved. And as you said, it was a very big slide on Europe. It was on the US market. It was down the best part of 200 points, and that was attributed to some concerns that Fitch, the credit rating agency, had raised. They were fairly general concerns about the US banking system's exposure to European sovereign debt. So clearly it's an issue that global investors remain very jittery about. But I guess by the time they came around to the Australian share market, those concerns were put to the side, and as you said, it was a pretty flat day on the Australian share market.
Let's go to some stocks. The Spotless Group has now knocked back its $700 million private equity bid, as you'd expect?
Well, not really. I mean, it's the second time that Spotless has been approached in 12 months from private equity. Clearly, I'm sure the private equity investors see a lot of value, but the price they put on the table was some 30% above the volume-weighted average price of the last 6 months. So it clearly is an appealing offer relative to the share market, and something like 19% of the 19% of the shareholders of Spotless have actually already signed up for the deal if it was to proceed. So dismissing the offer out of hand by the board is probably a fairly short-term strategy. I'm sure they'll have to reconsider it if you've got 20% of shareholders who are keen to accept it.
All right, watching brief on that one. What about the James Hardie half-year results? What did you make of them?
Look, I guess there was a bit of positive news there for James Hardie shareholders. It's been a fairly rocky road with disputes with ASIC, the ATO, and obviously all the asbestos issues that they've had to deal with. But dividends have been kicked off again, first time in about 4 years. Admittedly, James Hardie was running a share buyback over the last 6 months, but I think going back to dividends is certainly a sign that they expect, free cash flow to be sustainable into the future, and therefore to kick off that dividend routine again would be very well received by shareholders, and I think a 6% lift in the share price today certainly endorses that.
And I see Goodman Fielder had an update on its strategic review. What signals to the market there?
Look, not a lot of change in the Goodman Fielder share price. They've got a new CEO who's been in the role for the best part of 3 months, and one of the things they signal is that there's still a lot of things to consider and review. So Goodman Fielder recently raised about $250 million and recently refinanced something like $500 million worth of debt that was due to mature next year. I guess the board's a little concerned about where credit markets are going and where Europe is going, but still there's a lot of strategic matters that Goodman Fielder needs to see its way through. They were flagging something like $100 million worth of cost out opportunities over the next 4 years, but not a lot of detail, so a lot of work yet to be done by the new CEO.
Ken Howard, good to speak to you again.
Likewise, Tikki.